What's good, y'all? It's your boy CEO Sean. I'm coming on here just to do a weekly watch list for you guys. So today is Monday, January the 15th. So the stock market was not open today. Forex was open, but stock market was not open today. So that opens up for the options market for the options traders out there tomorrow, starting Tuesday. So I'm just giving a weekly watch list for that. So the main focus that I have obviously is the weekly time frame. And I also have the day and I also have the month. So again, for everybody that's watching this right now, you can see it. This is the day right here. This is the weekly, and then this is the monthly, right? So I have a couple setups here, and I have them. I don't have them in any particular order. I'm just going to go through every single one. So the first one is ticker symbol ASML. As you can see right here, we had a huge sell-off, right? We had a huge gap down with the sell-off this week for January the 2nd. Then we had an inside consolidation week. So what I'm looking for is if price can break below this low right here on the week at about, what is that, 708.04, right? Then we could possibly see downside momentum and price can shift to the downside, right? It's already shifted to the downside. It's already bearish on the month. It's already bearish on the quarter. And now it has the potential to go bearish on the week, and then from there also go bearish on the day. As you can see right here on the daily time frame, we have price pushing up higher, but then again it fails to close bullish, so it ends up closing bearish. And then we also have an inside day right here, so the market can open up if price breaks below 709.62. I'm also looking for puts there, so that's just stacked confirmation. So the daily can flip bearish with this. This is called a 2-1-2 reversal right here. This is also called a 2-1-2 continuation to downside because we already had downside movement right here. And then the month can also keep going bearish, and then from there also reverse and go down later in the future. So if I was to say my targets, I'd probably be targeting somewhere around, because this can move a lot, the ATR, which is about $14 or so, basically meaning how much can it move in a particular day, is about roughly $14 on average. You can calculate this pretty easily too. If I go, let's say from low to the high, you see it move $15 this day, and then this day it moved $11. So on average it moves about $14. So I'd say from 709 all the way down to, let's say, 700, that's only $9. I'm just being safe and conservative with, all right, bet, let's do 704. So if we go over here to Yahoo Finance, we can actually look at the options chain, and we can go down here to puts, type in the ticker symbol already. I already have it up, ASML. And if we look at puts, we're based on where we're trying to target, let's just say it's around 705, 700, right? We can look for those strike prices right here. So let's just say 705. That's going to be about roughly $1,700 over here to about $1,300. So about $1,400 to $1,700 for this. So it's going to be a little bit more expensive for some of the options traders out there, which is why I have other options on there as well. But I wanted to put this on here, particularly for myself, in case I wanted to get a couple contracts in this. Probably not too many, like 3, 4. Down here we got ticker symbol MCHP, right? So on the weekly we have, it was consolidating. What I'm looking for is if going into next week it can break down, so the 16th, right? If it can break below 83.92, we can see downside movement. We're also looking at a 3-2-2 reversal to the downside. By the way, for everybody who doesn't know, I trade the strat. I trade pure price action. And I'll also be having other videos in the future breaking down how I trade it. I'll show you how I do it. But these trades, if they go in the direction I think they're going to go, these are definitely going to print. So I think they're going to break below this low right here. If it can break below 83.92, we're probably going to see downside movement. If on the daily time frame we break below 84.80, we also could see downward price action, right? So bearish price action. So that's what I'm looking for. The month is already bearish, quarter is already bearish, the weekly can go bearish, and the daily is already bearish. As you can see, it closed lower than it opened up. So we were already bearish on MCHP. So now we're just waiting for the weekly to flip bearish, and then from there everything is just going down, right? So that's MCHP. My target for this is probably going to be somewhere around, maybe $84 to $82. Again, something really conservative. You can go all the way down here, obviously, to the 81s, 800. I mean, I said 800, 80s if you want to, but I'm just keeping it conservative. So if we just look this up real quick, let's just search for it, MCHP. And then from here, we're going to go over to the options section over here, and then we're going to look for puts, right? We think it's going to go down. So if we're looking for, let's say right around here for an 84, So what's between that? So 84, 85, and then we have 82.50. Okay, that's the closest thing we got to 84. So I'll either do 85 or 82.50. As you can see, um, for the prices to actually get into this particular trade, it's going to be roughly about $35 a contract, $25 a contract, roughly amount that amount to actually get into each of these contracts. So it's not really that expensive. You can actually get a whole bunch of these. So for all the small account traders, again, if you have $100 in your account, you technically could get 2 of these, or even 4 if you're putting the whole thing in there and then hold this for that duration. You can make some money. So this is MCHP. And I'm trying to go through the rest of these pretty quickly too. I don't want to hold you guys long. So this is Fidelity on the week. We see we have a bullish move, but then we have a shooter. Shooter basically is where the wick, where price went all the way up here, pulled back. That basically, the wick is 2 to 3 times the size of the actual body of the candle. That is what a shooter is. It looks like a shooter. It goes up and then pulls back, right? We see a shooter right here. That is a bearish signal, meaning price could obviously go bearish. If price breaks below 61.57, we could be seeing downside movement. And then from there, we could sell off, obviously. And then from there, the monthly and the quarterly are bullish right now. So this is not one of my favorites, but this has the potential to flip bearish on all these other time frames, and then from there keep selling off. So if I was to target something, it'll probably be somewhere around 61. So let's just look that up real quick. FIS, and then from there we're going to go over to the options chain, and we're going to look for puts, and we're going to look for a strike price closest to 61. So we have over here 60, right? So over here you see the options contracts only cost about $20, $18 right here. So, and this is 0.8, multiply that times 100, because there's 100 shares in one options contract. Therefore, this is roughly $18. So this is about to be $18. The 6250 contract is about $85 a contract. So you can basically weigh that for yourself. As you can see, as they get deeper in the money, you see how much more expensive they get. So let's say you got it at $85 and then it went up to $335. That's a 300% return. I think 400% return on your money. The deeper it goes in the money, as in the farther it goes in the direction that you thought it was going to go in terms of going bearish. So if price does go down and it keeps going bearish and it keeps going down to 60, then 59, then 58, you're going to cash out more. So that's FIS. Dollar General, we see we have an inside candle. Obviously, if it breaks this low of this is 132.53, then I'm going to look to go short. Obviously, I'm targeting probably 131 to 130 on this one. There's also a daily break. If it breaks this low on the daily time frame at 133, I'm also going to look for some bearish setups, and also the monthly and the quarterly are bearish. The day is not bearish, the week is not bearish either, but if they have the potential to flip bearish. So my targets for these are going to be about 132. So let's just look at those real quick for you guys. Dollar General, then we got options, and then from here we're going to look for puts, and then we're going to see what strike price. So what do we got? We said 131 to 132. So let's just look for those. Closest one we see right here, 131, 132. So these are going to be about $62 and then $91. So the small account traders, y'all winning today. I got a lot of them. It's not going to be a lot for y'all. So yeah, BDX, this is something I see. I saw a double inside on the day, daily time frame. So this day on Thursday it was inside, Friday it was inside, meaning that price is compressing itself, so meaning it has the potential to either spike up or spike down. But since the quarterly time frame, monthly time frame, and weekly time frame are all bearish, most likely the daily is also going to be bearish too, and then from there price is most likely going to go down. It's closer, as you can see, to going bearish, which is down here, than going all the way up here and being bullish. So I don't know what's going to happen. So if it breaks above this high, for example, I'm not going to be really looking for shorts yet until I see a reversal to the downside. But if price breaks 234.97 for the daily, I'm going to look for some puts. If it breaks this weekly level at 232.71, 270 right there, I'm going to look for puts. So let's look at that real quick. BDX, we got the options chain right here. I believe this is one that's going to be a little bit cheaper too. So for puts, we're going to look for, so around here, 234, 235. So this area, 235 to 230. This is only about $150. This is $149 $47 for each options contract for this one. So again, relatively cheap. Small account traders, y'all have a lot. This one's really, really good. Um, American Airlines shot down crazy last week on Friday, and then it got down, then sold off. Quarterly is bearish, monthly is bearish, monthly is inside also. The weekly candle, as you can see, price went all the way up here, and then from there it shot all the way back down, right? So that's looking for a 2-2 reversal to the downside, meaning it's going to break down. So if price breaks below this low right here at 13.19, I'm going to look to go short. So my target most likely on American Airlines is going to be about $13 to $12. So the options chain, this is going to be great for small account traders because these are really going to be cheap contracts. So $13, this is only $16 a contract. $13.50 is $42 a contract. $12.50 is only $6 a contract. These are extremely cheap contracts, guys. Like, you don't need a lot of money to day trade, swing trade these options. Like, these are extremely cheap. These expire January 19th, so they expire by the end of the week. If you want to hold it out a little bit longer, going into next week, you guys can go to this strike price, January 26th, expiring next week. And puts for those is going to be, let me see, for $13, it's going to be about $36, $19, and about $61. So again, still extremely cheap, right? Extremely, extremely cheap. So we're also looking at Apple. So again, Apple was bullish, last week. But it's still bearish on the month, still bearish on the quarter. Also, it's bearish on the day, and it's also inside on the day, meaning it's setting up for price is squeezing, and it has the potential to basically go down. If price breaks this low or price breaks this low, then I'm going to be looking to go short. So my strike price is going to be about 130, 183, 182. So let's just look at Apple real quick. Let's look at Apple, see what we got here. Options, and then from here, let's say we're going to hold this a little bit longer. So January 26th, right? January 26th. Puts, and then from there, 185. That's still, it's out the money, but it's still in the money. Let's say 182.50. That's only going to be about $121. So again, really, really cheap for those. So again, not really expensive, $200, $121. Still good for small account traders. And then the last one is Affirm, right? So on the month, quarter, we're bearish. Weekly, we're also bearish. And on the daily time frame, we're setting up for a 2-2 reversal. So this is a 2 down. This is a failed 2 up, meaning price broke this high right here. And then we failed to stay bullish. We failed to actually make price go higher. And price ended up actually going bearish, as you can see. It's going down. And now I'm looking for, if price can break this low right here, then we're going to obviously shoot to the downside, and now I'm going to short that. So if price breaks 41.65, I'm looking to short Affirm. And Affirm, we're going to look at that real quick, and then we're going to hold this a little bit longer because this is actually a bearish, like really bearish. So let's say January 26th strike price. If we look at the puts, right, so let's say it's 41 I was trying to target, or 40. That's only going to be about $179, $157, $136. So again, in the $100 range. So you can get a whole bunch of contracts like these if you have, a couple $1,000s in your account like me, and then you can just size up heavy. Or if you have a smaller account with $500, you can only get maybe 1, 2 of these contracts just to manage your risk properly, but you can still capitalize on the big upside. You can probably catch 80 to 100%, 200% with these, depending on how long you hold them and depending on how far they go. So again, I hope this was helpful for you guys. I hope we eat off of this. I'm definitely going to take some of these plays. Not a lot of them, but I'm definitely going to take some of these plays. If you want to learn a little bit more, definitely follow me on my Instagram at CEO with Sean. I also have a free class coming up on the January 28th. If you actually go on my Instagram and DM me the word training, I actually get you access to that for free. Like, you don't have to pay anything. I want to be able to add value to you guys for free. Because I see a lot of paid people on social media. They're charging for all this information. I need you guys to make money now for free. Because again, not everybody doesn't have the means to be spending all this money on courses and mentorships and masterminds and stuff like that. You need to be putting your money into the market. You need to be putting your money to work for you. So again, I hope you use these plays, use these setups to swing trade, to make some money. And then from there, if you make some money, DM me, let me know. And then from there, I hope you guys have a good week, and yeah, see you or Sean out. I'm doing pretty good. Let me know if I'm doing pretty good with these videos and stuff like that. I'm trying to get used to the YouTube flow. You know what I'm saying? But I hope you guys have a good week.